Hi, Celina here with EXP Realty, your trusted real estate advisor, coming to you with your August 2020 housing updates. And it is a jungle out there. The greater Phoenix real estate market is hot, and experiencing a demand of 20% above normal for this time of the year. We are experiencing crazy high demand and crazy low inventory. But why? How did we get here? This just didn't happen overnight. Since 2006, the population has gradually grown faster than housing, and it has taken 14 years for this to build up. This population growth was fueled by different factors, mostly new jobs, and it has finally consumed the surplus of housing created during the bubble years. After the real estate market hit rock bottom and we had a surplus of homes, builders slowed down production, some of them even stopped altogether, and it took 14 years, but we absorbed that surplus and then some. So now we have a shortage of homes. How short? Currently, our inventory of homes for sale is 46% lower than normal. That's alarming. So that's why right now we have too many buyers for the amount of houses available for sale. But despite the crazy market that I just told you about and the steady appreciation of home values over the last 8 years, Phoenix is still considered an affordable place to live nationwide. And that is the reason people keep moving here. Every year, more and more people move here. The weather, the job opportunities, the high quality of life, and the affordable real estate market are all top reasons why. So this market is as hot as 2005, you can say, when it was crazy hot. But what makes this market significantly different from the bubble and the crash years is the relation between housing growth and population growth. In the early 2000s, housing was growing faster than population. Builders were building like crazy, financing was easy, and this created a surplus of houses. But no one paid any attention to the surplus, and they didn't want to. Things were too good. So speculation and artificial demand was rampant due to loose lending practices. And everybody could get a loan, and everyone did, a mortgage loan, and people had multiple houses all mortgaged. And when loans tighten up after the crash, the surplus hit us like a ton of bricks. It was like, hi, remember me? You've been ignoring me all this time, but I'm here now. And vacant inventory jumped to more than double the normal levels. People were just abandoning their houses back then after the crash because the houses were worth much less than what they bought them for. So here we are, very different situation from then and now. Still a hot market, just very different situation. No easy loan, there's no surplus of houses. In fact, more than half of the houses with a mortgage nationwide have equity. So nobody's gonna be abandoning their houses this time. And this type of market of steady appreciation year after year is not sustainable over a long period of time. Nothing lasts forever, and we know that. However, the market's here now, and properties purchased today are expected to continue to appreciate over the next 6 to 12 months. So whoever's been holding out, waiting for prices to drop before they buy, you're going to have to wait a couple more years for prices to level. And by then, the interest rates will probably not be as low as they are today, and they're probably going to be higher. So you will most likely be priced out of the market. We'll see. So hopefully you don't wait too long. Don't be a waiter. Don't wait. It's all about timing, and the timing has to be right for you. Meaning, if you want a house and you can afford a house, then by all means you should get a house. So don't wait. Here we are, third week of the month of August, and there was really no summer slowdown whatsoever. Usually sales slow down between June and July, but this July we had a record number of closings, the highest in 20 years, and it was during a pandemic. So July actually broke records in dollar volume with $3.9 billion sold in 1 month. This is the best July ever since 2005, which previously held the record. So houses appreciated 12.5% from 2009 to now. In August of 2009, the median price for a house was $275, and now it's $315. And 1/3 of the houses sold in last month was above asking price. So buyers were not asking for any seller concessions. If you're a buyer, you have to pay your own closing costs. You have to bring your own money to the table. So just be prepared for that, especially if you're competing. And then half of the contracts that were accepted in August, in the first week and second week of August, were accepted within the first week. The luxury market, it is crazy too. Houses over $1 million, that market grew 93% from last year. So that is really, really crazy. And every single price point segment grew, but the $1 million price point is the one that grew dramatically, 93%. There will probably not be a time in history where your house will be this coveted and where your house will sell for this much, this fast. So if you're a seller, this is your time to sell. If you have to sell, sell now. So let me know. Also, let me know if you have any questions regarding anything I said about this housing update. And as always, I hope this was helpful, and I'm looking forward to hearing from you. Until next time.